On today's show, we are going to look at the healthcare sector and see how our investments can lead to a healthier portfolio. My name is Candace, and we will begin right now. Healthcare is an absolutely huge investment opportunity regardless of your investment style. We have some great companies with stocks that will satisfy dividend investors, growth investors, and even our hybrid dividend growth investors too. We have great companies on both sides of the border, so when we get into a few of those stocks, particularly the ETFs, they will have some heavy American diversification. America is the biggest market, and as you continue in your investment journey, it is a market you really should not be afraid to utilize. Before we jump into the specific stocks, I want to quickly touch on Wealthsimple as being one of the best places you can hold these stocks commission-free. With American stocks, we have Wealthsimple Plus, which is a fantastic way to hold them commission-free as well. Also, when you sign up using my code on the ticker below, they will give you 2 free stocks that can be valued up to $4,500 each. Full transparency, I get free stocks too, so using my code is one of the best ways to support the channel. If you do not have Wealthsimple or have a new account but have not used a code yet, then take that code below and make us both some money. Well, let's jump into the stocks, and we will begin with some exchange-traded funds, or ETFs for short. Harvest Healthcare Leaders ETF has a ticker of HHL. They are an equal-weighted ETF consisting of 20 large-cap global healthcare companies. These are big names like AbbVie, Bristol Myers, Pfizer, and Thermo Fisher Scientific. They also employ covered calls to generate a higher than normal return for their holders. Their dividend yield is 8.27%, and that is paid out monthly in the form of a 5.8-cent dividend per share. This is a great choice for a strong dividend-focused portfolio. They also have an American version, HHL.U, with a slightly smaller yield, though the dividends are the same monthly payout. In all fairness, the price on the American stock is a little bit higher. That's the only reason the yield is slightly smaller. Next, we have CI Healthcare Giants Covered Call ETF with a ticker of FHI. They invest in the top 20 by market capitalization in the North American health sector. They additionally use covered calls to enhance their dividend payout to their shareholders. Their dividend yield is a little lower at 7.601% in the form of a quarterly dividend of 25 cents per share. This one is also listed on the American exchange, but the American version has a slightly lower yield, so we're not going to talk about them here. Our final ETF is the Evolve Global Healthcare Enhanced Yield Fund, which has a ticker of LIFE. Holy banana bread, they got a pretty cool ticker. Their primary investment is within the Selective Global Healthcare 20 Index. They also write covered call options to keep their dividends higher. Their dividend yield is 7.058% in the form of a monthly dividend of 13.5 cents per share. Moving on from ETFs, let's take a look at some of the better healthcare REITs. We will start with an American REIT, CareTrust REIT, which has a ticker of CTRE. CareTrust holds a lot of assets within the seniors and healthcare related developments. They have a very nice yield of 6.016% that is paid out quarterly in the form of 25.5 cents American. Of course, the absolute best place to keep this stock is in your USD RRSP within Wealthsimple Plus. You always want to keep in mind that REITs do not pay taxes on their profits, as they pass those profits on to you as well as that tax burden. In addition to that, there is a 15% withholding tax on the American dividends unless you hold it in your RRSP. Staying south of the border, we also have Sabra Healthcare REIT with a ticker of SBRA. They invest in real estate for nursing, assisted living, and mental health facilities. They have a very generous yield of 8.929% that is paid out quarterly in the form of 30 cents American per share. Once again, this is one for your Wealthsimple Plus USD RRSP account. Returning to Canada, one of my favorite healthcare REITs is Northwest Healthcare Properties REIT with a ticker of NWH.UN. They invest in healthcare properties in the larger cities of Canada and a few other countries like Brazil and Germany. They have a dividend yield of 5.827% in the form of a monthly dividend of 6.7% per share. Because they are a Canadian REIT, the TFSA or RRSP is a great place to avoid the taxes. As we move into growth stocks, we need to keep in mind that with the illness, the overall health sector has been stressed. In the US, the canceling of elective surgeries has impacted the bottom line, as elective surgeries are huge profit makers for American hospitals. Due in part to that, the potential for growth has slowed a little, but is expected to come roaring back as we put the illness in the rearview mirror and North America gets back to normal. Now, with that being said, we do have a couple of exceptions. McKesson Corporation, ticker symbol MCK, is an American company that has weathered the illness with some respectable growth, and for that reason, they will be our first of our healthcare growth stocks. McKesson is a leading wholesaler of pharmaceutical products. Before the illness, their stocks were listed for $170 USD per share. Today, they are valued at $278 USD per share. That is a 63.5% return on investment over the course of the illness. 1 year ago, they were listed at $188 USD. So most of the return on investment was from the last year. In addition to their incredible growth, they also have a meager dividend of 0.667%. Moving back to Canada, we have Andlauer Healthcare Group with a ticker of AND. They specialize in healthcare logistics and specialized transportation. So if you have a patient who needs a heated transport, these would be the people you call. 1 year ago, they were selling for $37 per share, and now they sell for $48 for an ROI of 29.7%. In addition to that, they also have a small dividend yield of 0.415%, paid out as a quarterly dividend of 5 cents per share. I expect that if we revisit healthcare growth stocks in a year, we will see some very interesting recoveries in that sector. Of course, for this year, we still have our hybrid stocks to cover, and they were much harder to find, but I did find 2 great picks in the US. Getting to those dividend growth hybrid stocks, we head back to the States and we look at Amgen. Amgen with a ticker of AMGN. They are a biotech human therapeutic company with a strong stake in drug development. On the dividend side, they have a yield of 3.332% for a quarterly dividend of $1.94 American per share. On the growth side, their share price has risen from $199 to $235 American per share over just the first few months of this year. That's an ROI of 18% as they're starting to get back on track. The illness stagnated them for a wee bit, but if you zoom out, their share price was $163 5 years ago. Overall, they are doing well, and the future is looking quite bright for them. So they are definitely somebody I expect to keep my eyes on. One more hybrid stock pick, and as I mentioned earlier, it is also an American stock. GlaxoSmithKline PLC has a ticker of GSK. They are also in the pharmaceutical industry, and they are one of the largest firms based on sales alone. Their dividend yield is an impressive 6.193% that is paid out quarterly in the form of 62.2 cents American per share. In the last year, their share has risen from $35 to $42 American for an ROI of 20%. Adding in their dividend, you are getting over 25% on your return on that investment. Not too shabby. One last time, this is a share you should park in your Wealthsimple Plus USD RRSP. We covered a lot of good stock picks here today. I do want you to keep in mind that I am not a financial advisor and am just the beginning of your research. Your financial advisor is the end. If you guys love this video, be excited. There is way more to come. Until then, why not watch one of these videos, and before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.